Welcome back to the Noob Selling Options channel, everyone. I am absolutely thrilled to have you here today. What we're doing in this explainer is something highly requested by the community. We are pulling back the curtain and doing a full, comprehensive performance review of our first 6 weeks of trading weekly options. We're looking at exactly what happened from June 22nd to July 31st, 2026. This isn't just about throwing numbers around, it's about understanding the engine under the hood and why a strategy succeeds, especially when the broader market throws a complete tantrum. Okay, let's dive right into this. If you've been following us, you know our core philosophy is all about transparency. We don't hide behind paper trading or theoretical models here. We're talking about real, hard cash flow results in a live, completely unpredictable market. I am incredibly energized to share this with you today because the data we collected over this specific 6-week period tells a fascinating story about resilience and the sheer power of a mechanical cash engine. Here is our roadmap for today. First, the 6-week P&L review. Second, beating the NASDAQ downtrend. Third, how the cash engine worked. And fourth, our rules for the next chapter. Let's get to it. All right, Section 1, the 6-week PL review, running from June 22nd to July 31st, 2026. So, we're zeroing in on that specific window, the exact time since I started grinding out these weekly options. And bam, here is the headline number for those 6 completed weeks. $16,545. That is realized cash flow, actual locked-in money. For our local viewers, if we convert that using current rates, it's roughly 21,227 Singapore dollars, generating over 21K SGD in purely realized premium in just a month and a half. I mean, that is massive validation that this weekly grind actually works. Now, how does that cash flow actually impact the whole portfolio? Well, on June 22nd, we kicked things off with 168,170 SGD. Fast forward to July 31st, and the raw ending balance was sitting at 162,686. At first glance, you might be thinking, wait, did we lose money? But here's the crucial missing puzzle piece. We made a capital withdrawal right in the middle of it. When you add that extracted cash back into the equation, our adjusted ending balance actually climbs to over 171,500 SGD. So we grew the account net positive, even when the broader market was having a total meltdown. Let's pause on that withdrawal for a second because, man, this is a major milestone. On June 26, 2026, we pulled out exactly 8,888 SGD. Why is that such a big deal? Because extracting real money for real life is the ultimate proof. This isn't just a bunch of monopoly money or theoretical gains trapped on a broker's server. It's tangible. When you actually pull cash out to pay for your life, it completely rewires your psychology and proves all those hours analyzing charts actually paid off. Moving right along, Section 2, beating the NASDAQ downtrend. Look, anyone can generate cash in a raging bull market, right? But the true test of a system is how it holds up when everything goes red. Our benchmark here is the NASDAQ 100. Over this exact same time frame, the NDX took a dive from over 30,300 down to roughly 28,270. Normally, if you're holding a high beta mega cap tech portfolio like ours through that kind of drop, it's like being on a roller coaster with no seatbelt. You'd completely expect to see painful paper drawdowns of maybe 10 to 14%, basically bleeding out anywhere from 17,000 to 23,000 SGD. Now, what's really interesting about this is the completely undeniable contrast. The benchmark took a harsh hit, down 6.83%. But our adjusted portfolio? We actually finished the period up a positive 2.02%. While the rest of the market was selling off and panicking, we stayed green. Honestly, this right here is the ultimate proof of concept for everything we talk about on this channel. So when you take our positive 2% return and stack it against that nearly 7% drop in the benchmark, you get this absolutely beautiful number, a positive 8.85% alpha. Target achieved, for sure. It just goes to show that this mechanical system holds its ground even in a nasty downtrending market. We didn't just survive the drop, you guys. We strategically beat it. Okay, Section 3, how the cash engine worked. I want to be clear. This wasn't magic or luck. It's pure structural mechanics. The core concept here is options cash defense. What that means is we actively generated realized cash flow through our weekly options to absorb the unrealized paper drag of our underlying assets, pretty much dollar for dollar. Yes, our holdings pulled back just like the rest of the market, but that $16,500+ in locked-in profit, that acted like a giant shield, completely neutralizing the drop in our asset values. To sum up exactly how this played out, high beta tech undeniably took a beating, But because our options cash engine provided that complete structural shield, we entirely dodged the massive double-digit losses that crushed a lot of tech investors during those 6 weeks. In fact, even after pulling out that 8,888 SGD for real life, our cash engine actually turned a broad market correction into a net positive gain of over 3,400 SGD. We essentially forced the market to pay us while it was falling. How cool is that? And this is exactly why we grind. Simply locking in $2,000 to $3,000 every single week systematically drives down our overall cost basis. It builds this completely unshakable financial base. It's a constant reminder that playing the long game, letting those small, consistent wins compound over time, will mathematically beat trying to hit a hero home run every time you open a chart. Consistency, guys, that is our absolute edge. Which brings us to Section 4, Rules for the Next Chapter. We've definitely had some great wins in alpha to celebrate, but let's be real. The market is totally unforgiving if you get arrogant. So we need to lay down some strict psychological rules. I want to read this quote out loud, and honestly, this is a mental reset for myself just as much as it is for you. I don't need the market to be easy, I just need to stay disciplined. Seriously, keep this mantra on your desk. The market will always do its own crazy thing. We've proven our process works, now we just have to have the ironclad discipline to stick to it. Moving forward, we have 2 non-negotiable rules for our next chapter. Step 1, protect capital first. It is so incredibly easy to let a winning streak trick you into sizing up your contracts, but we absolutely have to avoid the deadly pitfall of over-leveraging. It is discipline over greed every single week. And step 2, respect the stop. When a trade goes sideways, act fast. We must cut those losses early instead of dragging them out and praying for a miracle turnaround that might never come. I really want you to reframe your mindset around this. A loss is simply a minor operational fee to keep your account healthy for the next setup. That's it. Taking a small controlled loss isn't a personal failure. It's literally just a necessary business expense. Risk control is our true superpower here. By staying calm and cutting the bad trades quickly, we preserve our capital, so the cash engine can keep grinding out those weekly premiums without blowing up. Well, that brings us to the end of our 6-week deep dive. I want to sincerely encourage myself and every single one of you watching to continue working hard, stay totally grounded, and just keep grinding out that weekly premium. I really hope you found this explainer super valuable today. If you did, do me a huge favor and hit that like button and make sure you subscribe to the channel so you never miss an update as we keep building this out. Have a truly fantastic weekend, everyone. But before you log off, I want to leave you with one final critical question to chew on over the weekend. Will you let discipline drive your cash flow next week? You have the tools, you understand the strategy, and you've seen the actual proof of execution right here today. Stick to those risk limits, keep compounding step by step, and I'll see you in the markets next week.